Hello everyone, this is Evan from the Trade Risk here on Wednesday, April 6th with a market recap video. We are first going to analyze the current market environment. We're going to look at some other markets, sector analysis, individual names, and then a few trade ideas to leave you with into the end of the week. We got a lot to cover, so let's jump right into it. The bulls getting things done today, up 1% on the day, and this is following up some weak action to start the week. Let's look at where we came from. You can see here, this candle was how we ended on Friday. Remember, we were talking about those almost the trifecta of bullish engulfing bars across the major indices. We got 2 out of 3, and it was a real kind of positive tone to go into the weekend with. And then but when we came in on Monday, we really saw some sluggish action. Monday, we put out a post here on the Trade Risk that it may be time to hedge up. There was a lot of sort of disagreement under the hood of the market, saying that that issues were just selling off a lot more than the indices would lead you to believe here on Monday. Lo and behold, we did get that follow-through gap down on Tuesday, but that was about it, because today we held the lows this morning. We opened up right at the lows, that we closed here on yesterday, on Tuesday, and the bears had a chance to sort of drive us lower and continue this pullback, break some support, break some meaningful moving averages. And then that would have been it. We would have had some type of kind of flush sell signal retracement. That didn't happen. We held those lows. We saw the internals. We saw market breadth improve throughout today. The lows held, and we drove higher through the FOMC minutes that were out around 2 Eastern today. And we closed on the highs of the session. We're going to get into some of the sectors that helped us do that. But once again, we've seen support hold. When things looked their worst, that magical bid showed up, and this market continues to grind higher. Now, we could say that we're still in sort of a range here between today's lows 204 to 207. That's probably pretty, it's a pretty reasonable range to expect us to maybe slog it out in over the next few days. Notice, the action has come to more of a grinding sort of rise higher. Look at where we've come from a couple of weeks ago. We weren't that much lower from where we are today. Compare that to the beginning of February and through March. We were just racing higher. Now you can see we're really grinding higher. We're getting a day or two of a pullback, and then we're heading higher. Then we're pulling back and pausing. So you can definitely see that we are slowing just a bit as we get up to these sort of nosebleed levels. Not that it should be unexpected given the previous supply that's in this area. Just something to keep on mind. So bottom line, you have a new sort of pivot, higher upper level pivot of support to work with. That's the beauty of this uptrend, is you keep getting higher levels to sort of put your risk up against. And I'd say the lows from today, 204, that's your line in the sand going forward, 207 on the upside. Now, the more interesting markets, IWM, let's talk about that first. The Qs are the most interesting to me. IWM, you can see, came back into this sort of slot here that we have drawn on the chart, as we've seen now for multiple weeks. You know why this is drawn here. This was a pivot area going back for a couple of years now. You can see we came back down right in between some of these fast-moving averages, found support, and closed on the highs of the day. That looks constructive. Now, I want to point out we still have this opening gap here from the beginning of the year. Keep that in mind, because I still do believe that the market's going to want to put this in play and close this out before this big impulse leg comes to an end. So I still think that's the overall mission. I'm not going to let my personal opinion, cloud my judgment. If we're going to start breaking down, we're going to start breaking down. But I still do believe that is going to play a role here. And the Qs, even more so today. Look at this beautiful looking bar here, up 1.64%. This was leading the charge today across all the majors. You can see, didn't even, just with yesterday's action, this 2-day sort of little minor sell-off retracement here, just came into the 8-period EMA. That's it. Didn't even really pierce below it and get closer to this 20 period before it found support. Closed on the highs, took out the previous pivot high here. This looks good. Once again, note that it is in the gap right now, the gap to start the year in January 4th, and it looks like, that it just really would want to fill this up here. If we put in another session just like today, tomorrow, then that gap would be filled. I think that's certainly where the market's beelining to. I do believe that QQQ the Qs would be the first to get their IWM perhaps to follow. So that's sort of the sector analysis. Things are looking good right now. I'm sorry, the indice analysis. Things are looking good right now. Let's look at some of the other major markets. TLT filling the gap from yesterday. You can see still just grinding itself higher as well. Tough to be involved in this. It's just it's 2 steps forward, 1 step back, and it's just above all the fast-moving averages. That looks good, but it's certainly not a rip-roaring trend here. So keep it on your watch list. Still perhaps just range-bound here, but it still has that bullish underpinnings given it's above all those fast-moving averages. GLD, you could see cooled off a bit today as well. Still just kind of moving sideways, digesting. It's just consolidating. That's all it is doing there. Gold, silver, similar situation, hanging out between 14 and 14 3/4, somewhere in here. Let that consolidate before the next big move there. USO having a big move, rejecting these lower prices, filling the gap that we saw here from Friday, and it's retesting this breakdown level, which is going to be pretty important to see if we can continue higher. I think if you do see follow through tomorrow, then you may have just some little false breakdown here, and that could get the longs excited, could get us back up to the upper levels of this range. So keep that on watch. USO, very impressive, 5% move. Natural gas, unfortunately, not so impressive, and unfortunately even more so that we were trying to be long this. We did get stopped out on this pullback here. Remember, we got involved right around here on this nice breakout bar, and it looked promising for a few days, especially here back on Monday of this week, but really it just gave it back. I don't like that it's back below these fast-moving averages again, so it's enough for us to exit this trade. Perhaps it just needs to kind of find some support, retest these levels. Maybe it rolls back over. Who knows? It'll do it without us for now, but I'm still keeping this on watch because I do believe UNG is at an interesting sort of interesting spot to potentially bottom out and try and reverse course like a lot of these other commodities. So it's closely on my radar, but for now, I'm just going to have to see the bulls prove themselves before trying to take another stab at that. And now let's look at some of the sectors here. XLU, let's start off there. We finally closed out of the remainder of our XLU trade. It was a great run. We were in it from 45, averaged out of it almost into this 49 level, but we got out of it here on this day. I think this was an interesting day to sort of take notice of, this 4-5, a pretty finally a change of character day, so to speak. And notice we did retest the all-time highs. We actually slightly broke below them, and then we came off them really hard. So it was a nice run, captured 8.5% out of this. I think it's up 12% out of utilities this year. So we'll move on from there, but it might find some support down here. Notice it's the first time it's really closing below the 20 period fast moving average here. Even back here on this pullback, it still managed to hold it on this day on March 2nd. So might see some rotation finally out of utilities. Maybe not defensive though, because staples are still holding up there. Almost these are in fact all-time closing highs in staples. So very constructive action there. But really the index that everybody's talking about right now, the sector, is biotech, and it had an explosive move today, up 6%, clearing above this prior band of resistance here, above 270. You can see the past 2 days giving you those little bit of sort of indecisive candles here at the top end of this range, and then lo and behold today it explodes higher. Now we did talk about this over a week ago, actually. Back on March 29th, we had put a post up saying 2 beaten up markets that deserve your attention, and I'm not mentioning that to try and take credit to be early on this idea. I'm mentioning it because a lot of these individual names were showing up on our scans as potential breakout candidates and as names that are in actionable tight basing patterns near resistance. And when we see a lot of those names start to surface on our scans, we start to be interested in the sector. So we did talk about that over a week ago. You had some chance to get into this. We played this with XBI. We got involved in XBI, the equal cap weighted index on biotech, back here on last Friday as it started to finally make a clearing close above this prior pivot high. And we've been in it since. We took some profits today. It was a nice run, up 7% today in this ETF. So there was a chance to get in there. And again, I just want to point out that being in the right sectors and watching that rotation and watching the names sort of under the hood and how they perform is just very important. So nice move here in biotechs. There continue to be a ton of names and setups in this space that still look good. It is very extended. I can't say I'd recommend buying it right now. I think if you own it, you can still have some of it on, but just be aware it is pretty extended here. But I wouldn't be surprised to see some gap up and chase this sector higher, as this is certainly what is working. Now, moving on to some individual names. Apple. Let's start there. This is still holding up well. It's ignoring this, all of the things that we've talked about here, this downtrend line, the golden ratio, retracement, this previous supply, and it looks like it just wants to continue higher here. I like the look of Apple. Keep it on your radar. Amazon, probably my favorite sort of FANG name or high beta momentum name right now. This looks good, closing above $600, above this previous pivot, 2.7% move today. That's very impressive. I like Amazon here. Facebook, I like it as well, not as much, but you can see if you want to be long this, you could probably just trade against 112 or these recent lows. It's holding some of these fast period moving averages. Let's see if we can get back above 114, 115, and then it can start making new all-time highs again. Twitter, also pretty interesting here. I think this day was the day to take notice. This was April 4th. Added some to my long-term position in Twitter on this day right here. Let's see if it can hold, basically hold the majority of this bar above 1650. I think you have a clear level to shoot against, though. If you want to give a little more room, 1550, these lows right here, you need Twitter to hold if you want to stay in this name, but looks pretty promising, at least maybe to a trade up to here to the top end of this range. Let's see how that plays out over the next few days. And Tesla is just an absolute lunatic stock here, up almost a double if you were buying somewhere down here, which I know is not saying that's where people buy is directly on the bottom, but it's just, the point is it's almost doubled in value in 30 trading days, which for a stock this big is just very impressive. So I guess at this point you'd have to just look your next near reference point, go to the weekly chart. You can see this is where the stock failed twice before, right up around 275. Perhaps it needs to just blow off into that level. Maybe you get a nice actionable multi-day short from there. I'm not sure, but for now it's just I'm not involved in it. I wouldn't want to short it, and I wouldn't want to buy it here, so I just have to watch it, and it's quite impressive at this point. Now, getting into some individual names, let's go through them pretty quick. Triple L is our first one. Keep an eye on this one. Look at this nice tight pattern it's been in for the past couple of months, getting to the top end of it now. Watch that going forward. WU, here's another one that's breaking out of this nice little kind of rounded base here in an uptrend. I like it above 1950. It's doing its work there. Fox, this one breaking out. This one had an explosive move here on Friday. Pulled 2 days pulling back, and then it's off to the races again. Keep that one on watch. TWX, similar space here, getting above this very important 7250 level, which has been keeping a lid on price for multiple months now. So keep that on watch for longer term time frame. GNC, here's another one that had a big move today, up 5%. Finally, HDP, almost pulled the trigger on this today. Really like this setup, probably an under the radar name. I didn't do enough research on I don't even know what it does or really if their earnings are coming up soon or anything like that, but nice pattern here. I like the look of this, so keep that one on watch if that interests you. And that's all I have for today. Remember, we do offer trade alerts. We do a membership here. We do trade alerts. So all of this, free videos and sector rotation, all the things that we pay attention to in the free videos, we do more in depth for members. So keep that in mind, traders.com/premium. And as always, thank you for watching. I will catch you next time.